Good morning, good afternoon, good evening. In this particular video, I'm going to be teaching you about chart patterns. So we have four major chart patterns that happen all over the market. Chart pattern number one is drop, base, drop. What does that mean? That means that we have an impulsive move to the downside, which is the drop. Base is a small pullback followed by another impulsive move to the downside. Drop, base, drop. Once you see this pattern formulate, the section where the basis, that is typically where you are going to identify your supply zone. So within the pullback, within the base, that's exactly where you're going to identify your supply zone. That's our supply zone. We'll draw it into the future. And what happens next is that we have a pullback towards this supply zone. And then from this level, we can now start the market. So then what happens next? We have a pullback towards this supply zone. And once we see that the market has reached our supply zone, we can place our entries from this level and sell just like this. This is drop, base, drop. Our second chart pattern is drop, base, rally. Drop, base, rally is whenever we have the move going downwards, that's the drop, then sideways movement, that's the base, and then rally, prices going upwards. That is drop, base, rally. Whenever we see this and we have identified that there was a structure break around this level, there was a structure break, then all we need to do is wait for the price to retest our demand, which is right here, our demand. Once the price has reached our demand zone, we can place our entries from this level and buy, just like that. That is drop, base, rally. Now, chart pattern number three is rally, base, rally. It simply means that we have an impulsive move to the upside, followed by a short break or a short pullback. This small pullback is called the base, and followed by a rally. This is rally, base, rally. Now the second rally, so we have first rally and then the second rally. Once this swing to the left gets broken, that confirms that that is our rally, base, rally. So once this swing to the left gets taken by the second rally, that's when the structure becomes rally, base, rally. Once we see that this pattern has formulated, all we need to do is identify where is the demand zone. The demand zone is typically within the base of the rally, base, rally chart pattern. So at this moment, all we're going to do is wait for the price to retrace towards our demand zone. Once the price has reached that level, we just wait for a rejection. And from this rejection, we can now place our entries around this level and buy, just like so. And then chart pattern number four is rally, base, drop. That just means that we have a move going to the upside like so, followed by a small consolidation, which is the base, and then we have a drop. Whenever this drop breaks structure, which is going to be around this level, which is a swing, whenever the structure gets taken, all we do is wait for the price to retrace, which means to come back towards our supply level. That's our supply. Once the price reaches that level, all we need to do is place our entries after we get a rejection, confirmation, and so on, and we simply sell the market from this level like so. Dear students, these are the major four chart patterns that we use in our strategy: drop, base, drop, drop, base, rally, rally, base, rally, and rally, base, drop. And now we are going to proceed and see these chart patterns play out in the row charts. Let's do this. And now we are going on to the row charts to see how these chart patterns play out in real life situations. Let's do this. So here's the chart. We get our path tool. We find an impulsive move to the upside, followed by a small base, and then the price dropped. This is rally, base, drop. The drop broke the structure around this level. It overtook this swing low to the left. So now all we need to do is identify a supply zone within the base. That is the base. We identify our supply zone. This is it. Blow it into the future. What happens? In the next day, we have consolidation. Price then, after consolidating for several hours, price now, during the London session, stop hunts into this supply zone. We place our entries from this level after a decent rejection and sell the price. This chart pattern is called rally, base, drop. So here we have drop, base, rally. This move, which is the rally, broke the structure around this level. So that's our structure break. It overtook this swing to the left, confirming that it is an impulsive move. This is once again drop, base, rally. So around the level where the base is, we have to identify our demand zone, blow it into the future like that. And now what we're going to do is anticipate for the price to consolidate for a bit. And then when the price drops towards this level, if we get a good rejection, we will buy from this level, and our take profit is going to be the swing high to the left. It reached our demand zone, and that's our take profit. This chart pattern is called drop, base, rally. Okay, so here we have two examples of drop, base, drop. Drop, base, drop just means that the price impulsively drops down. Then we have a base, which is a small pullback, followed by a second drop. The second drop breaks structure to the left. The swing is defined. We can see the swing. The swing is within this blue circle. That's the swing. The swing got taken by this second move to the downside called drop. And then we had consolidation. During the London session, we had a stop hunt, and then into the supply zone. This is the pullback, and that's the drop. This is drop, base, drop. Second example of drop, base, drop actually happened right next to it. Here we have a drop, base, drop. Whenever the second drop, which is the second impulsive move, takes over the swing lows to the left, that confirms the chart pattern. So all we got to do now is identify our supply zone, like so, draw it into the future, and then when the price stop hunts this Asia high into our 1H order block, that's the move to the downside. This is drop, base, drop. It's basically a continuation pattern. Here we have an example of drop, base, rally. This is our drop to the downside, followed by base, and that's the rally. This rally broke structure to the left, which is around this level. The best time frames to actually see this happen is on 1H time frame. The rally broke this swing, which means that it overtook it in this impulsive move. Now all we need to do is identify a demand zone within the base. That's our demand zone. We draw it into the future, wait for the price to reach this level, and once it does, we just wait for a rejection, and then our take profit is going to be this swing high to the left. That is drop, base, rally. And finally, here we have rally, base, rally. This is our rally, which is a move to the upside, followed by a small pullback. It's literally one candle, rally, base, rally. Within the base of this chart pattern, we need to identify our demand zone. Our demand zone is right here. We draw it into the future, like so. The second rally broke the structure to the left, which means that it was a break of structure. So this move to the left actually broke structure. Impulsive move in one go. It didn't just break that structure, it also overtook this level as well. So quite a powerful move. Then we had the consolidation. Then we had the pullback towards this level. Then finally, during the Asia session, during the London session, we had the stop hunt of Asia lows into this 1H order block, which is also our demand zone, and that's the impulsive move to the upside. Take profit is going to be the swing high to the left, just like so. So here we have rally, base, rally. This move to the upside, rally, base, rally. We have a structure high to the left, which was taken by this impulsive move to the upside. We have a swing to the left, which was taken by the second rally within this chart pattern. So this is our break of structure. Within the base of this structure, within this chart pattern, we are looking for a demand zone. That's our demand zone. The pullback happened around here. We could have placed our entries on a smaller time frame around this level. Take profit is going to be the swing high to the left. That is rally, base, rally. Here we have another example of drop, base, drop. Drop, base, which is the pullback, followed by another drop. When you see this happening, you need to focus on the pullback section, which is the base section of the chart pattern, and identify where is the supply zone. That's our supply zone. Go into the future. The price is going to consolidate for a few hours, like it did around here, and then eventually when it stop hunts the Asia session and goes into your order block, is going to make a massive move to the downside. This is drop, base, drop, chart pattern. But it needs to break the structure and the swing to the left. It most definitely has to break the structure, which is the body, which is the lows of this section right here. That's the structure, that's the swing. Sometimes price will only break the structure. But if it also breaks the swing as well, then that's a good look. So right here, this move broke the structure. And eventually, when this candle closed over here, it also broke and overtook the swing. So that's a very good sign. So there you have it. These are the 4 chart patterns that we use for our strategies in this group. Learn them, learn to identify how to spot them, make sure that you are familiar with them when you do spot them, learn how to identify when the rallies or the drops break structure, identify your supply and demand zones within the base of the chart pattern, and look for the price to retest that level, which is the supply or demand, and place your entries. Practice, 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 step by step. We are all going to get there, step by step. Stay focused. I'll see you guys in the next one. Take care.